All right, we all remember 2006, right? The bubble, deep in bubblicious territory, when the average single-family home that sold in Essex County went for $476,000. Good times, good times. On to 2007, we hadn't yet heard that the bubble had burst because it wasn't a bubble any more than there's a bottom. It was a trend that kept going up and then stopped going up. And it took us a while to figure it out because it didn't just go like a bubble. So 2007, we're down to the average single-family home in Essex selling for $465,000 from $475,000. Not so much worse. We're down a few percent in the number of homes that sold as well. On to 2008, average single-family home sold in Essex County was $402,000. Now that's a drop. You're going to feel that if you had bought a house 2 years earlier for $475,000. All right. On to 2009, down to $372,000, down from $476,000 just a few years earlier in Essex County in Mass. So we've now seen a pretty steep decline in the average single-family home price. This is the average price that things were bought for, but that doesn't mean that we're buying million-dollar homes for $372,000. It means that the average home that changed hands that year changed hands for $372,000. But in 2009, we saw the number of homes go up by a couple of percent. Number of homes sold, that is. All right, on to 2010. The average single-family home in Essex County sold for $402,000, up 8% from the year before. Well, does that mean that 2009 was the bottom? Did you miss the bottom? Would you have spent the least money per month on your home if you bought a home in 2009 when they were down to $372,000 average in Essex County? Well, if you bought in cash, maybe. But if you were financing it, you would still have to deal with a mortgage. Do you remember mortgage rates in the 7s? Well, in 2006, they were in the 7s. In 2007, they were bouncing around from 6.3% up to 7%. In 2008, interest rates were 6.25%. So there we go again. August 2008, 7%. By 2009, you could still be spending up to 6% on your mortgage in about the middle of the year. But wait a second, 2009 was the bottom for single-family homes here in Essex County. How could you be spending 6% on a mortgage and be getting the bottom? Here we are in 2010. Single-family home prices went up 8%. But we have interest rates 4.3, 4.4. I've never even heard of interest rates that low. Could that be the bottom? There is no bottom. There is simply a series of intertwined market conditions which create a monthly cost and a monthly an availability of property and a monthly cost to you. So, rather than looking for this one mystical singularity where you think you're going to get a better deal than you'd ever get at any other point in your life, what you should be thinking about is what you can afford to spend each month and the homes that potentially fit that. And if you find a home that you love that fits what you can afford each month, that's when you buy a home. Forget about the bottom. No such thing. You can reach me online at virtualhomes.com, or you can email me at dan.bernal@virtualhomes.com, and I will see you next time.